Um, the trading day has began. For those that don't understand or know, this New York Stock Exchange for here in the U.S. pretty much is our big hoo-ha when it comes to trading securities. They open up at 9:30 a.m. and they close at 4 p.m. That's the trading day. Um, so I'm starting off with my Schwab account. As you see, it's gone up since yesterday. Some of my holdings have increased since the opening of the bell or opening of the day. Anyhow, today I believe this is like the seventh video. I believe I think so. Um, so how do you buy a security? So as you see here, I'm logged into my Schwab account, and if I decided I wanted to buy, let's look over here at what I was looking at. I wish I had bought this last week. It's been doing rather nicely. But let's say we were going to buy nail. I'm not going to complete the transaction because I'm not ready to buy nail. But anyways, I'd like to. So, trade stocks and ETFs. Let's see here. All right, so if I were going to place an order, all right, you can look it up or you can type it in. I type in nail, and I click on it, okay, and this is giving me the daily high and low, 52-week high and low. They got the bid and the ask, okay. So what am I trying to show you here? All right, so the prices. This is what they're displaying right now is the current price. You have people bidding and you have people asking. So when you go to bid, you're going to buy stock, all right, or an ETF. So you look over here, you got buy, sell, or sell short. We've talked about selling short a little bit. We're not even going to go there right now, but I'll probably in a couple of videos from now, I'll try to discuss selling short in more detail. But I think buying and selling is pretty intuitive, straightforward. So if we were going to buy a nail, I'd click on buy. The quantity, let's say we're going to do 100. And this is the thing, the key that I want to show you. The other thing I want to point out before we go into this is the timing. You can select how long you want to put this offer out there. So what's happening is if I put a market order in, it's going to go out, and what that means is whatever the market rate is, that's what I'm bidding. For all practical purposes, it's slam dunk. It'll be fulfilled within less than a minute, probably, or minutes. I can put in a limit offer. All right, what does that mean? If you look back here, let me jump back over on this screen. When I bought, oh yeah, MEGF. When I bought this, I paid $2 a share for it. At the time, the market was, I believe, like 205, maybe 207, something like that. It was more than 2. So when I put in a bid on it, instead of doing the market, I put in a limit and I put down 2. I thought, we'll see what happens. Within about 15 minutes, it was filled, which surprised me because it was actually going up while I was waiting. But yeah, that just shows you, depending on how urgent you want this, you can choose the type of order that you want to put out there. Now you have a stop and you have a stop limit. We'll get into that a little later on, so I can explain it. You can use, like, for example, the stop limit is how you can protect yourself on your investments from, in other words, you can limit the amount of loss. So say I was buying this and I was buying it to go long, meaning I'm hoping it's going to go up in value. Now let's say I paid $19.34 a share. Okay. Um, Now stocks go up and down throughout the day. That's the volatility. So you would want to go back and look at some charts to get an understanding of how volatile is it. Meaning, does it jump up and down 10% daily? If so, you wouldn't want to set your stop limit at 5% because most likely it's going to activate and you're going to turn around and it'll sell those stocks off. The idea of a stop limit is, say, for example, you don't want to lose more than $2 a share. So I would set my stop limit at $17.34. And what that means is if that stock drops to or below that amount, it's going to automatically put it out there as an offer and sell it. It's a way to protect your investment. So, because what happens? What if it dropped $9 a share? That's a pretty big hit, and you wouldn't want to suffer that. And most people can't sit here and just stare at the screen all day. So that's a way that you can protect your investment by limiting how much you're willing to lose. But again, the point being is if you set that limit too tight, chances are it will activate and you will sell the stock when you really don't want to because you're wanting to, the volatility is like noise. Think of like the noise factor in your house. It goes up, it goes down, it goes up, it goes down. But there's also a limit that you're willing to accept. And when it gets too loud, you're like, hey, kids, hold it down, right? Well, if the market drops too low, it's like, hey, I want to get out of this investment because I'm losing my shirt. That's your stop limit. But you need to know the difference between the average noise factor versus, oh, this is real important or real serious. So that's what you use that for. So just for right now, for typical buying of stock, you're going to be looking at primarily the market order or a limit order. And that's what you're looking at. So once you do that, you're going to click on this review order. It's going to show you the same thing what you selected, and then you're going to click buy now or whatever the term is. Now, some things to be aware of if you're going to buy and sell securities. The first, I'd say the first hour of the day and the last hour of the day are not the best times to trade unless something really freakishly happens and you have to be there. The reason I say that is when the market first opens, it hasn't settled down. So, for example, if you put in a market order, then you're telling it go buy 100 shares at whatever the market order or whatever the market is. Well, if the market jumps up, say $20 a share at the very opening, but then rapidly drops right back down, you're going to buy 100 shares at $20 over the normal price. I'm exaggerating just to give you an idea of the fact that it's very volatile, and it's extremely volatile at the very opening and the closing. Now, why is that? These day traders, and I'm not suggesting day trading, to me, I look at if I buy into a security, I'm probably in it for anywhere from about a week to maybe a couple of months. So it's not get rich quick, it's get rich slowly over time, right? But the day traders, they typically buy in, and by the end of the day, they want to get out. So they don't have to worry about, well, what happens if the market tanks overnight? They're in and they're out. That's why they call it day trading. So that's why the market's screwy at the very beginning and at the very end of the day. So what's the rule of thumb? If the market opens at 9:30, wait until 10:30. Look at the market, see if it's settled down. If it has, then make your purchase or your sell. You'll find it a lot easier on your nerves, and you'll risk a lot less, and you'll probably pick up the investments you buy. You'll probably find a better price. So, anyways, food for thought, as they say. But anyhow, that gives you an idea So then after you've made your purchase, I'm going to clear all this and get out of that. But you go back to order status. You can look over at your order status, and right now I have no orders waiting. Orders with fills. And no, that's anyways. This is just for what I have in place. For, in other words, what I'm doing right now. I thought it would show me history, but I haven't looked at that in a while. Anyhow, but the point being is after you've placed your order, you can look at your order status and you can see whether if it's been filled or not. Once it, if I just ordered that and it filled, once it filled, I would go back over here to the tool that I'm tracking it in. I would have probably already added in like here. I already had nail in here. So then I would click on add lot and I would say this is how many shares I bought and this is how much it costs based off the information I pulled off the screen here. And then all this other stuff would be pre-populated automatically and it would keep updating. So that's pretty much how easy it is to buy a stock. Now there's some things that I'm going to talk about in the next video that you need to be aware of, things that can happen with your stocks and different things as far as making money and so forth. So anyhow, tune into the next one. Take care. Bye.